I feel like today's episode of the Growth Zone is going to be a game changer. And, you know, for me, this weekend I went to a mastermind event and there were some challenging questions there. And one of the things I thought about is how do we impact lives? And we all know, and we're all caught up in this for the most part. Maybe I'm not speaking for you, but you work every day and then you never really live the life you want to live. Like you're not doing the things you want to do because you're just on this hamster wheel. And so for me, I want to impact lives to the point I want to change my life and my wife's life to the point where we're buying cash flowing assets and you don't have to be on house arrest. Like as a mortgage lender and a real estate agent, our phones ring 7 days a week. And if you don't answer the phone, they're going to go to somebody else. They treat us like a commodity until they get to the closing table and they go, oh my gosh, it matters that I worked with somebody who knows what they're doing. And I will tell you from my seat, agents matter. Like if you're working with an elite agent versus somebody's cousin's daughter who just got their real estate license, it's a big deal. Like we see the negotiations, we see what's getting done, we see the competency on, getting the contract done and getting things done. So what I want to do is I want to help people build that passive income so they can live a better story and be a better person for themselves and for their family. So one of the hacks was hard money. And I didn't realize it. And I was just telling a story before we started. I have a friend of mine, he's 20 years old. And we were just me and him in the gym on a Sunday night. And I said to him, I said, hey man, do you know about hard money? He goes, yeah, that's the only way I buy my properties because he doesn't have to hop through all the hoops of getting a general contractor, getting a HUD contractor, getting all this thing to get the work done. And Jamie, I might be speaking out of line, but you can speak to it when you talk about how you give your money out. But he gets his money fast. Like he gets an approval in 24 hours and he gets the cash in his hand in a couple few days and he can make the offer on that short sale. He can make the offer on that sheriff sale, that tax lien sale. And then he can go and rehab it. And then when he's done, pay off the hard money with a DSCR loan or a cash out refinance to replenish his funds. This kid's 20 years old and he already has a net worth of $300,000 with 3 units. Right? That's the way to do it. This kid got the hack early and he tapped into a mentor that showed him how to do this. So that's what I really want to do with this growth zone is help us all educate other people so that they can live their better lives and we can live our better lives too. So with that said, like if you're not getting coached by somebody or you have a mentor, let me know. I do. I have been getting coached since 2015. It's worth it. I went to an event this weekend. I pay a ton of money for it, but the three takeaways I got from it this weekend will shift and change my business. And I'm going to share it with you guys for free because I want to show up at 100% and give you 100% of what I can give you so that you can impact lives as well. Now, as far as, Jamie Dietz being on here, I looked up ChatGPT to get him a intro. So I'm going to just read this intro from ChatGPT. And Jamie, if it's wrong, just correct it.
Let's see
Right.
how he does.
And I
Yeah.
would say, I'm using AI at a low level, but man, it makes life so much easier if you can leverage it. And so here it goes. It goes, today's guest is Jamie Dietz, widely known as the hard money guy. Jamie is the founder of Nextdoor Capital, a private lending firm specializing in hard money loans for real estate investors. With years of hands-on experience, he's become a go-to resource for creative financing solutions, helping investors close fast, scale quickly, and win in competitive markets. Whether you're flipping, building, or buying rentals, Jamie's no-nonsense approach to lending and deep knowledge of real estate make him the expert you want in your corner. Let's dive in, and Jamie, welcome to the show.
Great intro, Chat GTP. That was fantastic. I love it.
Yeah.
Have at it, Jamie.
All right, guys. Thanks for hopping on this morning. As Jeff mentioned, I'm a hard money lender. I'm based here in Pittsburgh. I only lend in the greater Pittsburgh market right now. And we do private hard money lending. And I'm going to just kind of walk through real quickly a few slide decks and tell you a little bit about what hard money does, what it's for, how to use it, and maybe even how to make you guys some more money. All right. So just let's start off. I kind of do things as Jeff recommended backwards. So what is hard money going to do for you guys as agents, as insurance people, whatnot? Um, Primarily, you're going to help more sellers. So if you out there looking at properties, talking with clients, and they have a property that doesn't, I'm going to say, fit the typical MLS transaction, property that needs work, a seller that is desperate and needs to close very quickly, the hard money program may be good for a buyer and get the deal done much quicker. Help more buyers. If you guys are representing buyers, I don't know how often people turn and move for their personal residence. One every 5 years? Does that sound about right? Um, Most of my buyers, my investor buyers, are closing multiple deals a year. I have some that are even closing multiple deals a month that we do our repeat lenders for. So if you're thinking about commission transactions and you got to wait every 5 years for your homeowner to move, we have people that close 2, 3 deals a month out there. So it's a great way to have more repeat business. Um, and as the market slows, most of us, I think, agree that the homeowner transactions have really slowed. So one way to expand your market is to get into the investor side. And if you haven't already done that, it's a whole different world of how to look at properties and how to evaluate properties and how to provide, additional skills. But one of the things that you can provide is a hard money option for these investors. That's, different than traditional financing. And of course, we all want to make more money. So I really like the program because you have repeat buyers and it's all about building relationships and doing more deals over time. So what is hard money? Hard money is just it sounds like this weird program out there but it's basically just based on a hard asset. We are doing short-term loans, 6, 12 months, something along that lines. We're doing based on the value of the property, not the credit. So we don't really care what your debt income score is. We're basing what is the value of the property. One of the most important things that people don't understand is where the source of funds are coming from. It's not a bank, it's not a Wall Street, though there is some sources for Wall Street we'll talk about later. These are private funds, so these are personal funds, and I have a pool of investors that provide the funding for these things. And this is for investors only. We don't, if you're going to live in the house, hard money doesn't work. Is your investor for a fix and flip or a rental, some kind of investor program. In fact, our loan docs have a specific document in there saying you're certifying that this is for our business purposes. We don't need to get into all the Dodd-Frank rules and regulations out there, but basically, investors only is the important thing to know. At the bottom, hard money is called lots of different things: private lending, bridge loans, capital financing, asset-based loans, they're all the same thing. It's basically short-term financing to stabilize a property. So right now we're doing, let's say, 6 to 10 deals a month, and most of those are fix and flip. That's what the market's demanding. Probably 70% of what I'm doing right now is a fix and flip loan. I think most people are familiar with what that is. But we also do other programs. A bridge loan is basically, hey, I've got an investor who's finishing up one rental, not done with it, but found another one, needs a short-term loan to get that property. Um, Buying rentals, which is the Burr method Jeff talked about this morning. You buy the property with a hard money loan, short term, you get it fixed up, stabilized, and then you cash out with a DSCR loan or some other kind of commercial long-term loan. Quick closings. We do loans sometimes on perfectly fixed up, beautiful investment properties, but they need to close quick. We can close as quick as title can close. I mean, I've done deals in 5 days. I say most people, I tell them 2 to 3 weeks, but literally we can close in 48 hours if the project is set up and title work is done. Most of our projects have some kind of distress. And the distress could be, yeah, the building needs work. There's a leaky roof. The kitchen's been removed. A lot of that is what we do, but we also do distress because of seller distress. I got a seller that needs to close in X amount of days to buy another property. There's a whole bunch of reasons. Somebody that inherited a property, lives out of state, needs to sell quickly, doesn't want to go through the whole MLS traditional financing So a lot of times it's just a quick close and somebody has some kind of distress. That's what a lot of our loans are for. As far as key terms, they're a little bit different than your traditional financing. Again, 6 to 12 months is pretty typical. We write most of our loans for 12 months, but if you're an investor and you get your project done in 6 months, you can cash out then, and there's no penalty. Now, interest rates are much higher because the loans are so short. We've got to make back some money in that short period of time. So it's 12 to 15% is the market out there. We're kind of on the lower end of that market, but there are other lenders in the market doing 15% or more. Uh, Loan to value, this is kind of important for you guys to know. So we're going to base the loan amount on the after repair value, what we think it will be worth when it's all done, fixed up, renovated. So if it's $100,000 property when it's all done, we'll typically lend up to about 70% of that. Just like a traditional loan, you would pay some points up front. 2 to 3 points is pretty standard in the market. Often we can do 90 to 100% of your purchase price and 100% of your rehab budget. So a lot of these investors are going to buy properties that need work. We'll come up with a construction draw for the rehab. And as work is done, you get the rest of the loan payments paid out. But I tell everybody, like, most of the time, you're going to bring 10 to 20% down payment. That's 10 to 20% of your purchase price. Yes, there is zero financing out there for certain deals, especially if you have some cross collateralized with other properties. But most of the time, I'm going to say 10 to 20% is pretty typical of the purchase price.
And so, Jamie, I want to pause real quick because there's a couple questions that are running through my head. Number one, with your money that you're giving, do you lean that on the property?
Yes, just like a normal traditional financing, we're first lien position on the loan. Second position, we don't do them. Very few people do. So yes, it's a recorded mortgage on the property.
Okay. The reason I ask that is because, and this is clutch. So if you haven't had this happen, this will help your buyers. We've done this several times now. Um, when speed is the factor, like, and Jamie, to your point, like sellers want cash offers for the most part, and they want to close quickly. So if you're in that position, Fannie Mae has a product. It just came out a few years ago. It's called delayed financing. So what we've done for some customers, if they have enough money in retirement accounts, they can use that retirement account to buy the property cash right now, and they win the deal. The key to that guideline is that there's no lien on the property that you just bought. If that's the case, they can do a cash out refinance immediately, like within the first 6 months, to replenish their funds. So I didn't know if you leaned it, that wouldn't fall into this category. So we'd have to do the typical DSCR or fall under Fannie Mae's typical rate and term or cash out refinance guidelines. But we've done that and helped agents win deals when people have the funds available from a different source. So just keep in mind Fannie Mae's delayed financing. And Jenny is a loan officer on our team. She's been with us 3 months now. Jenny, did I miss anything on those guidelines that you'd like to share?
No, I think you got it. I mean, I think for
Okay.
the most part with the delayed financing, obviously it's the 6 months unless you have the exception. And like you said, if they have the cash to buy it, then that's a source of funds where we can verify it. So we're,
Okay.
yep.
And I was just,
And
Jamie, the reason I
Jeff,
asked that question is because if it wasn't leaned, then we could do the delayed financing. And if they finish their project quickly, like in less than 6 months, we could replenish their funds and make them liquid quick. But if it's leaned, it won't work. We just got to follow the regular guidelines.
Jeff, that's a good thing because a lot of my buyers, they basically make offers with no financing contingency. And I'll
Yep.
explain how that works before. So while it's not cash like their particular cash, they make cash offers. And behind the scenes, we are already underwriting the property. So my repeat guys that I do this, I mean, we do this monthly, right? We
Yep.
talk about what they're going to make offers on the week ahead of time. We walk through the numbers in general. And so they know with confidence they can go in and make a all cash offer per se, but the cash is really coming from next door capital, or the
Yep.
majority of it is as well. So it's so competitive out there to buy investment properties right now. If you go in there like, oh, I'm going to get a traditional financing, I need
Yeah.
45-day contingency. forget it. You're at the very bottom of the list. But if you can go and say, no contingencies, no financing, I close in 15 days, that's how you win deals. And that's how my guys win deals over and over again.
Yep.
Couple more slides here for you guys. So we don't focus too much on the borrower credit, like your debt to income ratio. We focus on the property. That's what separates the difference. Source of funds, we talked a little about that. We're not contingent on Wall Street Bank or anybody else underwriting this thing. This is all done in-house. I can usually do approval, like Jeff mentioned, in 24 hours. In fact, most of the time I just do it on the phone. We walk through some photos and whatnot, and a scope of business plan, and I can do it right over the phone. Minimum docs, I don't need tax returns. I don't need a bunch of information there. Again, I'm underwriting the property, not the borrower per se. So it's just very minimal information we need from the borrower. And then speed and flexibility. Like, again, I can approve you in 24 hours and we can close in a couple days. That's not super common because of the title issues usually take the longest, 2 to 3 weeks, whatever your title is for that market. But we're very flexible. We can cross collateralize with other assets. We can get creative on how to make the deal done. And that's what we do before you even submit the offer. So sources of funds, like most people think hard money is hard money and they're all companies are all the same, but whether you work with me or another hard money source out there, it's always important to ask, where's the funds coming from? So there's four main categories that you should find out where it's who's backing the deal. Friends and families is great because it's flexible and you know personally, and they probably don't know how to underwrite a deal. And you can probably get the best leverage and best rate that way. But you know, Uncle Charlie may not have funds available this month and you need a deal. And they may not have any process and know how to record it properly. A direct lender like our company, you know, we're a setup entity lending money. We have a formalized process, doc set, legal information on how to set it up correctly and record the mortgage correct. There's also Wall Street money out there, which is more like a traditional lender, but they call themselves hard money, like the Kiavis of the world or Lima One. You may hear those names bounced around, but they've got, you know, underwriters, they have third-party appraisals, and they have attorneys. That may take you as long or longer than a traditional loan out there. They advertise great rates, but when you dig into their fees, you have to be very careful that you're not getting feed to death. And then if you go on Facebook or any other social media stuff, you'll have brokers out there. They present themselves as hard money lenders, but they're not. They're just brokers. And that's fine. I mean, they do provide a great service of like being able to survey multiple different companies. In fact, a lot of them come to me for loans as well. But I think the closer you can get to the source of the funds and who's actually making the decisions, the better. So if you're picking up the loans to call my company for a loan, you're talking to me, and I'm the one sending out the funds. I'm the one underwriting it. Yes, I have some people on my team, but on the brokers, just make sure you understand where it's coming from. The closer you get to the source, usually the better the likelihood the deal is going to close. So how do you get a loan? First of all, a lot of investors come to me and they don't seem to have their ducks lined up or not even sure exactly what they're buying. I've got people call me and say, hey, I need a loan on this property in, you know, Dormont. Great. What's the address? I don't know. I don't have it available. Like, have your information available. Have just the basic information, my property, my address, your scope of work, what needs to be done. Being able to present what you've done in the past is really important. So like, I don't need a lot of documents, but I do need to understand what kind of experience you have. Have you done the fix and flip before? Do you own a bunch of rentals? Maybe you're a contractor that has a bunch of renovations experience. So make sure you have that information readily available in a quick spreadsheet or be able to present it quickly. And then I always recommend building a relationship with one or maybe even multiple lenders before you need the money. So if you're a brand new investor or you haven't used hard money before, don't expect to call me on a Monday and say I need to close on Thursday, but we've never talked before. So this is a personal business. I'm sure you guys have the same thing where when you're getting your traditional left loans, Jeff, like, you want to have a long-term relationship with somebody, call in advance, tell them what you're trying to do on a general, and then when you get properties that are coming up that you actually want to make offers on, uh, you're not just making a cold call out of the blue. And then corporate docs. So I'm going to say 99% of my investors that we work with, they have their LLC, their operating agreement, their bank statements all set up in advance. You want to have that done before you start making offers. All too often, new investors, they wait till after they have a deal under contract and then are scrambling to try to get that organized. Um, and then provide as much detail. I mean, if you have a pro forma, like I'm going to buy the house for X and I put $50,000 in renovation on this thing, and this is what I think I'm going to make on it, the more homework you do in advance, the more likely you're going to get funding. And that's really just to make the process quicker, but it's also just to show that you've done your homework. A lot of times people think, well, I don't know. I'll figure it out later on.
Yeah.
I may sell it. I may flip it. I may hold it. I may renovate this room, but I'm not quite sure. And then it just tells me that you haven't done your homework. So if you want quick, reliable funding, just try to do your work in advance. Benefits for investors, fast capital. We talked about that. Minimal red tape and documents. Build a partnership. So I've got guys that do deals once a year, and that's great. But I also have ones that do it 2 to 3 times a month. I mean, we're talking about deals on a daily basis. And I'm almost like a second underwriter or second
Yeah.
investor partner with them. Well, I don't own equity. They'll call me to bounce off ideas. Like, hey, I got this property. I'm looking at this thing. What do you think? Do you think the ARV makes sense? What would you do with this renovations? We walk and we design kitchens together. It's just part of what I do because I've been buying properties and renovating them for years. Now I'm just doing them with other partners. So it's not just a transaction like, hey, this is where I get funding from. You want to build a long-term partnership with your lender. And it's the same thing with a real estate agent, right? I mean, you guys aren't just pushing paperwork out there. You're providing advice and you're giving recommendations. So it's the same thing with your lender. For the investors, ultimate flexibilities. You need, you want to put more money down? Great. You want to fund the renovations yourself and you only want to finance the purchase? Great. We can make almost anything possible because we're ultimately flexible because it's our funds that we're lending out.
And even on the renovations themselves, Jamie, does it matter to you who's doing the renovations?
It does matter, but almost any option's possible. It matters that I know. So a lot of my investors, they have in-house teams or they're doing it themselves. And I'm okay with that if you have the experience to do that. If you've never renovated a house and you've, watched HGTV a couple times,
Right.
then that's an issue. Um,
Right.
but a lot of my guys also are professionals. They may have a professional corporate job somewhere and they're going to outsource that. I want to know who your contractor is because that's really going to be critical of do they have the experience to do the work? I mean, if it's paint and carpet, no big deal. But if we're talking a major renovation on a deal, I want to know that their contractor has the experience to get that done. So yes, it is important, but I can be flexible of who that will be.
Okay.
I mean, that's really the quick down and dirty of this. The whole point is, if you're an agent out there doing consumer owner occupied housing and you want to expand into other markets, there's just different resources you want to provide your clients. And hard money is just one of them. Obviously you've got your network of contractors and title companies and whatnot. And I just hope that, hard money will be one of them. And if I can't help you, I know somebody that can. Not every program works for my loans, but if not, I know somebody that probably does, either locally or nationwide. Like Jeff says, I'm part of a mastermind for the lending business as well, and we refer things, to Philadelphia, to New York, to all over the country. I'm happy to help give those referrals out as well.
And Jamie,
Awesome.
for me, hearing this and learning this over the past few years, this is the cheat code. right? So like I've sat in this lane of traditional lending for 25 years. And then friends of mine are buying and flipping and making money. And I'm like, how are you doing it? And they're like, I just get hard money. And I'm like, what is hard money? So I start digging into it and I'm like, oh my gosh, like it, to your point, it's fast, it skips the red tape. And, in our minds, everybody's always thinking, well, my rate needs to be the lowest on the planet. So if I have 6.5 and somebody else has 6.375, it ain't going to work. They're going to go with the other person. The investors know the game. Like they know what they're doing. So paying 12% to them, 15% is not a big deal when they're renovating it. You gave the example earlier. Say they're buying it and just make numbers even. They're buying it for 50 grand. They're putting 50 grand into it. So they're into it for 100, right? When they're done, it's worth 200. Well, now you have a place that's worth 200, $100,000 worth of equity that you're making right now. That the difference between 6.5% and the headaches of trying to get that money versus the 12% is nothing. That's stepping over dollars to pick up pennies when you can be turning a profit, right? So, when I heard about that, I'm like, I have to shift my mindset from rate is everything to no profitability in making the money is the big deal.
Yeah, and Jeff, I mean, there's several of us, right? Like there's 3 or 4 of us here in town that are, I'm going to call them local private lenders. And our rates are all a little bit different. Our terms are a little bit different. And and that's fine. I think you've got to find what works for you, but don't shop dollars. The 1% here or the little fee here that somebody else charges, it doesn't make a difference in the long run. Find somebody that you like and partner with them. That is, I really feel is the key. If you can pick up the phone and call your lender and walk through a deal even before you have it under contract and just bounce ideas off of them, that find somebody that you're comfortable doing that with because it's just such another level of service. It's not about saving 500-600 bucks here one way or another. It's building that relationship on the long term. And I tell you, I'm not saying how often I do it, but it's monthly that I'm referring deals to my regular borrowers. So sitting where I sit, I get a lot of off-market deals thrown across my desk. And
Yeah.
yeah, occasionally I'll pick up one, but very rarely. I'm not super active in that. But if you tell me, look, I only like South Hills and I want to buy rentals, 3 bedroom, 1 bath in this market, I get those deals across my desk and I just throw them out to people. So it's the same thing. Find somebody that you're comfortable with, maybe even a couple of them, and make sure you build that relationship long term.
No, I love that. Any questions from anybody in the room?
I got
Anybody have
one.
any? Go ahead.
So just out of curiosity, like just the average person who has been thinking about buying investments and things like that, what would they need in order to come and get a meeting with you or have a candid conversation? What should they be prepared for and what should they have ready?
Well, eventually you're going to want those documents that I talked about, having your LLC set up, your bank statement set up. I think that's what you're going to need anyway. So might as well do that in advance.
Okay.
But
Okay.
more important than that is figure out what your goal is. Because so many investors have different goals. Some people want, I need short-term capital and I want to flip properties. Great. We can help you kind of guide you in that. But some people's like, I've got a corporate job. I make $300,000 a year. I don't need money. I need somewhere to put my money. That's a different goal, right? So I have investors that do that as well. Their goal is not cash flow day one. They want to build a portfolio over time and because they need to put their money somewhere. So it's just a different goal. What is your, and I can help you define what your realistic goals are.
Okay.
So good. And I love what
Good.
you said about the second set of eyes on the underwriting piece of it. Like, does it make sense? I mean, obviously, you're not going to give money to a project that doesn't make sense. So if somebody's over improving a property that's not going to make it, like they're buying it for 50, they're putting 50 in, it's going to be worth 75 at the end of the day, you're going to go, yeah, we're not doing this.
Well,
So, yeah,
yeah, and a lot of times someone comes like, I really want to hold this when it's a rental, and I look at their budget like, dude, you're way over improving this house for a challenging South Side neighborhood, right? You shouldn't do that. Let's figure out a way to get this thing nice, neat, and clean so you can rent it tomorrow. You don't need to renovate it like you're going to live there, and that's just part of the discussions we can have.
right. That's so good. And then for the agents in the room, Who here has heard of AI agents? Like people starting to use AI agents? Has anybody? Like even if you want to throw it in the chat. And I say this because um, at the mastermind event, and tell me if you'd be interested in me having somebody on. At the mastermind event I was at this weekend, I met a KW agent who has implemented an AI agent. This thing answers her phones for her. It takes people to the next step. She's been able to level up her business and get out of the busy work. But to what Jamie was saying earlier, it's about relationships. So our business is all about relationships, and we still have to be available, but you could leverage AI to help you scale your business and get out of the busy work. So the agent was sitting right next to me. The real estate agent was sitting right next to me at the event. I talked to her. I'm going to schedule a call with her. Would you guys be interested? And she said to me, Jeff, I could come on your growth zone and talk to the agents about building their own AI agent. And she's like, and if there's enough people that want it, I can come to Pittsburgh. She would put on like an 8 hour in-person seminar, and you would walk out of that meeting with your own AI agent that could help you scale your business. If that's something you're interested in, just drop it in the chat, say yes, or shoot me a text message, let me know. Because if there's enough demand there, then we'll help it. Now, I know me, I'm looking at employing an AI agent to answer the phones because every time I answer the phone, I'm saying the same thing every time. And if I can get that answered and get the person to the next step, then there's no delay on me, calling the person back an hour later, or like I'm in a meeting like this. I'm not obviously answering the phone or emails, but it can answer it right now. And it's incredible where the intelligence has come with these conversational AI agents that you can literally talk on the phone to. It's not a phone tree. Like it'll get you to the next level. So if that's something you're interested in, let me know. And then I'll get her on the next growth zone. And then Jamie's information is here on the screen. If you guys want to set up an appointment with him and have a conversation with him, I feel like, as tough as this market has been for the past few years, this is a new lane for you to run in where I love what Jamie, I wasn't even thinking about what you said. Like the average person, it used to be every 4 to 7 years buys a house, but with the increase in rates and the lack of supply, that number's bumped up. It's now like 6 to 10 years that people are moving. So it's not every 4 to 7. But if you're working with investors, to Jamie's point, you could be turning and closing on properties more frequently. So
And
that,
Jeff, you get it on both ends. So you get it on the acquisition,
yeah,
original, and if they're flipping it, you get it on the back end,
when
right?
you
So
sell it
you get a double commission on that.
quick, that's a beautiful thing. Yep. And then the last thing I'm going to leave you with, and this is not work related, but it's personal. The biggest takeaway I got from this weekend, and there were two different speakers that talked about it. It was like, oftentimes we see each other and we're like, hey, how you doing? And the answer is what? I'm fine. Well, how's the family? They're fine too. But half the people, half your friends are going through something, right? And I'm not one that like speaks negativity into people's lives. Like I'm always trying to build people up and breathe life into them. And even when things happen to me, I'm like, it's no big deal. It's a first world problem. Who cares? But they said, think about it like this. When you were in your worst moment of your life, who was there for you? And immediately I thought, my dad. Like my dad was always a rock. He was always the one that was right there, or my mom or my sister. And what did they do in that moment for me to pull me out of that gutter or that low moment in my life? And they were like, just be that person to your friend that needs it. So when you're talking to somebody, ask them how they're doing, but ask it a second time. Like, no, the second time, ask them with sincerity, like, no, really, how are you? And let them open up and talk to you and just be there for them the same way that that person was there for you when you were in your lowest moment, right? Because we all need to lift each other up. We're not meant to do life alone. And so I just say that to you because I need to do better at that. I know for me personally, like somebody tells me they're going through something and I'll often be like, oh, that's great. And just move on because I'm like, I can't shoulder any more stuff right now. But I need to do better at that. So I'll just leave you with that. Well, I hope this helps you grow your business. Jamie, thank you for taking the time to hop on here. Everybody that was on here, I hope being here for the 36 minutes that we've been here helps you in your business because that's the goal is just to help everybody grow and be able to impact more lives. With that, have a great day. If you guys need anything, we're here for you.